Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, August 31st, 5:10 p.m. Eastern Time, coming to you from the financial capital of the world, St. Augustine Beach, Florida, with tonight's Revere Market Insight video as we wrap up the month of August. I can't believe how fast this year is going by. 4 months left. To 2020, 4 months left to 2021, two of the strangest years I've ever experienced. I'm sure two of the strangest most of you out there have ever experienced also. Let's get right to it though. State of the market. We're in an uptrend. We're in what we really refer to as full bull, which is leaders in a bullish uptrend acting fine. Short term moving average means all 5 of the major indexes are above their short-term 21-day exponential moving average and trending in the right direction. Medium term, 50-day moving average, all 5 indexes above their long-term 200-day moving average, all 5 indexes above there. Why do we talk about this at the beginning of every video? Because 75% of all stocks are going to trend in the direction of the market. Additionally, another 50% of all stocks, 50% of the return of any stock is going to be tied to the sector and the industry group that it's tied to. This is a study by Investors Business Daily. So this is why we look for the market first, then we look for the leading sectors, then the leading industry groups within those sectors, and then the leading stocks within those industry groups, and we hold them as long as they're acting well. And when they stop acting well, we jettison them from the portfolio. So trend, there we are, full bull. What just happened today? Tight action to close August. Nothing wrong with today's pullback. G5, the leading growth indexes, finished mixed. We had 2 of them positive, 3 of them negative, but the net average was a negative 0.3%, which matched what the S&P 500 did today. Mild pullback on the NASDAQ 100 and the Dow and the mid caps, while Russell 2000 finished positive, led by banks. We'll take a look at some sectors and stocks, and what we're going to wrap the video with is a full review of all of the holdings in GROTECTION. So let's take a look at the team running Revere here. You're interested in a fully transparent investment advisory firm that actively manages conflict-free. We're a fiduciary, which means everything we do is in our client's best interest, not in our best interest. Give us a shout. We would love to talk to you. You can reach out to any of us. You can email Dan, Tim, Hunter, Muriel, Alex, or Don at revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. One secondary indicator I want to quickly take a look at is the NASDAQ McClellan Summation Index. As you can see how this hooked up late last week and also came off of oversold. This acts as a tailwind to stocks. So we've got one more thing flowing, one more tailwind working in our favor here. This is something I check on a daily basis. So let's get to the indexes now, and we blow this up a little bit to get a better look. S&P 500, you can see tight inside day. So quick review, we had a pullback 2 weeks ago, held the 50-day moving average, nice rally once we got back above the 21, broke out to new highs over the last couple days, and now a tight inside day to close August. Nothing wrong with that. NASDAQ 100 had been a laggard for a while, especially 2 weeks ago. This actually topped on August 5th. We talked about this extensively in our podcast 2 weeks ago, but same situation, undercut the 21, held the 50, nice strong rally off of there. Last week, all-time highs, pullbacks contained by the ADMA, and now a tight inside day closing near the top of the range on the NASDAQ 100 also. Let's check the Dow Jones Industrial Average by looking at the DIA. Tight action, underperformance, which you frequently see when you go to a risk-on scenario, which is what we've been seeing lately with growth stocks outperforming. Usually means the Dow is going to underperform. Still holding nicely above its moving averages, really just going sideways. We point out that these underperformances by the Dow and outperformance by the NASDAQ don't persist for more than a few weeks. So you'll see, I'm pretty certain you'll see some strength coming back into the Dow. When exactly, I don't know, but you don't really see for months on end that the Dow underperforms. How about mid caps, MDY? Mid caps, the incubation index. The S&P 400 doesn't get a lot of press, but this is where the next big growth stocks before they graduate into the S&P 500. This is where they cut their teeth. Nice little 2-day pullback here after a strong move out of this above this 500 area here. Very nice 2-day pullback on lower volume at the top of its range, and we're set up to bust out of this if the summation index continues to work in our favor. And then finally, small caps. Nice 2-day pullback here after a move above the 50-day moving average. We've got the 50-day moving average flattened now. We've got the 21 pointing up toward the end of the week. It should intersect with the 50 as long as we continue to look good there. And this 233.64-ish, 234.50 area forming the top of this base, this flat base. And again, we can strongly bust through here and give the market another leg up if small cap stocks continue to cooperate. I like to break this down into the growth and value component of here. IWO, nice day today, finished positive, and then IWN, the value component of it, also finished positive. Both pointing in the right direction now above their 50 and their 21 day. Hadn't had both oars rowing correctly for a while, both on growth and value. So we've got some room to run on those indexes. Let's see what sectors lagged today. XLK and XLE actually lagged today. Here's energy. Pullback. We still got this downtrending 50-day moving average, but we have flattened out on the 21. XLK leading for a while, but a little bit of a pullback today. But an inside day. Got to have this type of digestion. What outperformed today? Banks, KBE, forming a cup and handle, and that's going to mean that XLF, the financials, actually those were down today. So it was banks that led, but on the broader large cap. So it was really the small cap banks that acted well. You know what? Here's an example, Wells Fargo. Not a good day. There had to be some news here that I haven't quite picked up, but because we don't really consider Wells a leading stock, down 5% on 70% average volume today. Something happened with Wells today. I'm not really exactly sure what, but I will take a look at it after hours. So let's get to our current holdings in the portfolio, and one second here as I get my chart situated. Let's go to the current holdings in the GROTECTION portfolio and see where we stand. So let's start out. First of all, our largest position is SSO. This is what I consider the ballast of the portfolio. This is basically a 2 times SPY, 2 times the S&P 500. So when rotation occurs underneath the surface, the SSO kind of moves. It doesn't have, and even though it's double the S&P 500. It's not as volatile as a lot of individual stocks. Sure, its beta is twice, but its average true range is very manageable, and that's one of the reasons why we hold it. Plus, using the leveraged version gives us freed up cash to hedge in the case we need to against some of our growth stocks. So this is our largest holding. IGV, we've got a 6% position in this. This is The software ETF, we bought this here on 820 when it got back above the 21-day, and we're having a nice run here. We're using the ADMA and constantly raising our stop as this rides up the ADMA. FAS, this is the financial ETF. We've got a 2% size in this as it sits along the ADMA above the 21. Apple, 5.5% position in this, really benefit from a nice day on Monday on Apple, and then a tight inside day to close the month there. NVIDIA, 6% size on this. We added a little bit to this to get it to 6% when we pulled back and bounced at the 8 EMA today. Net, we've got a 6% position in this. This really needs to start doing something. Going sideways for about 3 weeks. The 21-day is flattening out. This is about as down far as I want it to go. Stop is a couple of percent below the 21 here. Very quality stock. Some selling to close the month. Let's see what happens as the new month continues. Datadog, or the new month starts tomorrow. Datadog, 7% size on this as this just continues to ride the ADMA up after a big gap up on earnings, 15% move on 407%. Love to see these. Then they pull back and they hold the 8 and use that as a launch pad, and this is acting pretty well. Dexcom, 6% size on this. This just continues to trudge higher along the 8 EMA. Upstart, acting well, 3% size in this. This one is a wild stock here. About an 8% ATR on a daily basis, which is actually down from 10% a couple of weeks ago. Relative strength riding higher. Rides the ADMA higher, nice 6% gain today. The trade desk just going tight sideways, 6% size on this. Can't really make any progress, but not really giving it up either. This 50-day is providing support as it comes up to meet the 21. Like to see this finally do something. ETHE started out with 2%, added 1% on this today as this broke back above Ethereum. The actual coin itself, the actual crypto itself, broke above 33.55, which is a big fib level between the highs back in May and the lows of July. This is a 61.8 retracement level, big fib level. It got broke out last week but failed, pulled back, held the ADMA, broke out again above it today when we added this other percent. So we got a small profit on this. Going to use the 21-day as a stop on this. Devon Energy, one of the best energy charts you'll find. 2-day pullback after a nice move up off the bottom. DraftKings 60 has just been a brick wall with this. Every time it pokes its head above it, immediately gets slapped down. That's happened 3-4 times over the last week. So we're sitting about flat on this, waiting for the sellers to dry up. You can see back in this area here from February to April, 60 acted as support after multiple pullbacks, and then finally it turned into resistance, and that resistance is still acting strong as we bump up against it here. DOX, 2% size in this. This thing is also nice up 11% day. We started building this position on this pullback to the ADMA after this big earnings move. And again, this one's a very wild stock. The range today was from 80 to 92, 12 divided by 80, so over 10% range today on DOX. That's why we keep our position size smaller on these really wild stocks. Don't want to get shaken out because of just too much volatility. And then finally, Tesla, we added to this today when it broke above the 730 resistance area. So give it a little bit of room when it pulls back, but you can see just how tight this it was 729-ish over here. Then for about 5 days in a row, it was about 715, 717, moved above that area yesterday, and then broke through the other resistance area, the 730 area today. So actually it pierced it yesterday, pulled back right, closed right on it, and then breaking out above it today. So those are our 14 positions, actually 15 positions, including the SSO. Beta is over 1.9, but our downside, if all stops were to get hit, is just about a 5.5% exposure. So Let's see what September brings us, and that's going to wrapping up the month of August. As always, I'd like to hear from you. I'm on Twitter at @dvandenbord. You can email don@revereasset.com. You can phone 855-REAL-WEALTH. So that's the end of August, and this is Don Vandenbord telling it like it is. Thanks for listening. Have a great day.